Now this is Wednesday, 3rd of March 2026. This is the market review. So right here you can see this is real-time data. This is markets open. I'm actually recording this on Wednesday. So I'm actually doing a review for Tuesday, the 3rd of March. Tuesday, the 3rd of March 2026. So I'm going to toggle on the replay tool just to make this easier. So we have this right here. This is the daily chart. You can see that on Tuesday, price actually traded to the low hanging fruit objective. During the weekly the weekly forecast, you saw me mention I anticipate low result liquidity run conditions to swiftly run the low hanging fruit objectives, which were here. So that was run out yesterday. It was not low resistance liquidity run conditions, but I'll walk you down to the lower time frames and show you how exactly the business was conducted. So this is 4-hour. On the 4-hour time frame, you can see the bodies of the candles respecting this inverted fair value gap. It was a BC. It got inverted. Now price is respecting it with the bodies of the candles, and they are probably random. Body stopping dead right there. Also, this stays open. We like that for bearishness. I'll drop down to an hourly chart, and I'm bringing attention to the fact that this is a leg down, which takes sell stops at this low. Price then excuse me. So we've traded down, swept sell side liquidity, and we're retracing. How far can we retrace to? We're retracing to OTE. So this is a sweet spot. This is 62% retracement on this down leg. So it rejects this monthly immediate rebalance as we forecasted. Go back and look at the market forecast. I said if I'm wrong on, or if I'm too early on shorts, then price will be willing to trade up to this void portion of the new week opening gap, and also immediate rebalance. We just hit it, meander around it a bit and reject it, lower low of retrace at the end of yesterday, which is Tuesday. This is a review we're doing on this day, which went up to OTE and started rejecting again. I'm also bringing attention to this CB. This is the first CB after the open. This one right here does not have a displacement that takes liquidity. So I'm framing my fair value gaps based on the displacement that takes liquidity, which is this low. So this qualifies, and you see it being used. Lows, finding support here. The body stopped, continued. You find price rejecting it here, stalling again. You find this candle close just at the high, this candle at the low. This wick down here is at the low. The body respecting costing encouragement. So you see that it has influence, and that's a ripper on the 1 hour time frame. Actually, this ripper is used to frame the setup I took. So I actually took a trade. I'm going down to the 15-minute time frame. Now this blue shaded box is going to spell out the narrative. I think I'll reserve that just for the 1 minute time frame. What I want to show you here is this SMT divergence. So you see a higher high here, yes. On the E-mini S&P 500 is a lower high. So there's an SMT divergence before we see this low, which sweeps out this low. And this run lower is the first time we're having low hanging fruit objectives being swept on regular trading hours. So it's true that London ran down to low hanging fruit objective during the London session overnight, but after the opening bell at 9:30, which comes in here, this is the first time we tag low hanging fruit objectives. So it was very good drawn liquidity, and this lows here as well. Now I'm going to toggle down to the 1 minute time frame where we can look at the narrative and see exactly how we could have engaged this move lower. So just to put the chart in order, right now let's look at the pre-market session. So if you look at the Asian range from 7 p.m. to 7 p.m. all the way here to 5 p.m. New York time, you see that there was traded lower, so there are buy stops resting all above these levels. During the pre-market session, we're looking to target those buy stops. Pre-market starts at 7 a.m. and you see price rally taking major buy side liquidity. Unfortunately, could not go higher to these other targets because of this 1 hour reaper I just showed you. So you look at this, you find that this ICT's 2026 bread and butter model, this one actually uses the first presented fair value gap after 7 a.m. So 7 a.m. the first fair value gap you see here, it actually had displacement, it took a short-term high and price retraced to it. Institutional order for entry on that array and we rallied to measure buy side liquidity. That's a big 2.5 hour trade, 26.75 stop loss, framing it on candle 1 of the fair value gap pattern, and we hit buy side very cleanly, taking profits at the low of that 1 hour array. 1 hour reaper results in 2.5 hour. Now that that business out of the way, let's look at the New York AM session from 9:30 to 11:30 a.m. New York Eastern Standard Time. So this is how the session played out. That's a short I took. This model is a short position I took. If I could just turn on execution labels. Oh, execution marks are actually on. The issue is I'm on replay mode. So just so that you're convinced that I actually executed a setup, I'm leaving replay mode and I'll just go back to that portion of the price action. So it's right here. Good. Now I'm zooming in and I'm going to toggle on executions. Okay, so now that we have that on the chart, let's proceed with the review of New York AM session. So you can see opening price was here. We gapped down almost 500 handles, literally. So there was a large open range gap and it was a down gap. So price immediately opened, tried to rally to that midpoint of the gap. It fails at lower quadrant. So I'm seeing this as resistance. The next candle still unable to get to lower quadrants. As a matter of fact, I see resistance, I see weakness at open, and then we're trading at the low of this reaper. So we'll bump the low, we'll bump the midpoint. We're forming an SMT divergence. ES is weak, it's not willing to go higher. As a matter of fact, Nasdaq was doing all this consolidation here while Dow and ES had already taken pre-market lows. That's why I actually held through in the trade, waiting for pre-market lows to be delivered, because I was so sure, given that Nasdaq and given that the ES and Dow had already taken pre-market lows. So we see pre-market session high get taken. This pre-market session high right here, the high after 7 a.m. This is the low after 7 a.m. So New York ATM model just stipulates that when the New York ATM model stipulates that when pre-market high is taken, we'll target pre-market low and vice versa. So that was the model I was trading. With other confluences such as the SMT and the fact that we're keying off a 1 hour reaper, and also the fact that we found a swing high here, 3 short-term highs. So this intermediate term high, and then we see price print this inverted fair value gap. Post this high, higher high, which is a turtle soup. We run lower. If you pull up a flip retracement from this high to this low, you find that that's OTE, sweet spot right there. So I got short on this is my first short position here. I got short one contract right there. It was the low of that inverted fair value gap as we traded back into it, and or rather as we traded down back into it. So we traded up into it, hit OTE, and then we traded down. As that candle closed beside the low of the inverted gap, I'm shorting, and then after it displaces lower, we do not see a good displacement because the bodies of the candle close. Like I'll just draw this out so you see clearly. The bodies of the candles, they are closing just at this low. Once you see bodies close outside the low, like close down, they will keep wicks down and they were closing a bit up, then retrace this dip. It was high resistance. I actually took a second short entry, so I was short 2 contracts, but when I saw all this back and forth, I decided to take off the first position right here. So right around the midpoint of this ripper, you see me shorting just below the ripper, and I'm taking profits just around the ripper. So I took that position off, and then it consolidates right up till I was dingsing it at 10:50 10:30. I was saying I could be in a position till 10:30 and that'll be my time stop, because from 10:30 I want to see displacement for sell side at pre-market lows and this, but immediately the clock hit 10:16, we saw that displacement come to the marketplace. Pre-market lows got swept. This New York AM lows right here got swept, which also aligned with pre-market lows. Low hanging fruit is swept, and price hits my TP, which was right here. Price further went down to London launch low, and from there we see this pullback, and it retraces going higher to post the high of the day way above. So immediately after this trade setup, we saw a rally. At that time I was really out of the marketplace and I was chilling. So just run through the confluences for this trade. We saw that it's rejecting lower quadrant of this open range gap. We'll see form a swing high at the 1 hour ripper. Also prices in premium relative to 8:30 opening prices right here, aligning with the ripper. So based on 8:30 opening price, we're shorting above 8:30 opening price, and that's what we want to be doing. That is shorting in premium. That's what we want to do. So the buy side was not likely because there was no showing strength, and when it was retracing and going back and forth, you see that this retracement was too deep on this range. So price could not be retracing this deep on this range and wanting to go higher. So I stuck with the position and was looking for my targets. I held on through all this consolidation because we could not retrace so low and then be looking for those higher targets from pre-market. The eyes were targeting the pre-market. We could not target them now because we retraced so deep, and during this consolidation it was clear that we're not going higher. So pre-market highs were taken, and this is a New York ATM model delivering bearish. Sequential SMC was also a factor as a confluence, and target was sell-side liquidity, so that was a very good setup going lower. That concludes that particular section. So I'm showing you what happened later. Price rallies, trades above this ripper, and look at the bodies, look at the candles, lows respecting it, the bodies respecting consequent encroachment of the ripper, and price rallies up, going up into launch after consolidating during the start of launch, where this move actually begins at the very popular macro. So I'm going to draw it out. This is the 1050 1110 macro. I call it the reversal macro. If you look at my templates, you find out that that's I title it the reversal macro. So the reversal macro is from 1050 to 1110. Price could always reverse on the move that's happening in the opening range and the New York AM session. So we see that happen. It shifts up and it just rallies to major buy side liquidity. So back to the buy side that we're targeting during opening range. The first one is hit here, the second one is hit here. And notice when the first one is hit, we retrace, find support at the ripper, rally to measure buy side liquidity again. This hit, we retrace a bit, properly cleaned up, and we'll find ourselves back at the mean opening price. So that was Chairman's model right there, and very insightful as price was so deep in discount. After trading to this low, it retraced back to midnight opening price, and that's where we'll find the market on close macro closing. So that's basically it for this review. If you found that insightful, hit the like button, subscribe to the channel, and I'll see you in the next video.